about 75% believe that this new type of competition from fintechs, other banks, tech giants, will eventually take over the payments channels that we know them, the way we know them today.
I should have invited Daniel, who's one of the, apart from being kind of a host today, one of the top 200 fintech influencers in Europe and founder and CEO of Auka. Welcome, Daniel.
Thank you.
In order to be successful, you need at least half of the critical mass of people doing payments.
I wouldn't be guessing because I would be basing it on what we've learned in the markets where this has actually happened. And I think we don't need to use the crystal ball. We can just look at what has happened. And the big question is basically then when, because we know it's eventually going to happen. That is predominantly the reason why the new payment tools are not being adopted, because it doesn't provide any value.
Even from a marketing point of view, can you tell me how many banks or how many merchants or how many, let's say, fintech provider making some kind of really focusing marketing campaign using mobile payments?
Actually, consumers in Bulgaria are very open and ready. Smartphones are also enough.
If you don't need any hardware, then it's easier to address the SMEs. It's easier to address everyone. The big players is not a problem.
That's a good takeaway for me as well.
This means that banks are not disruptors. Banks are followers.
Some brave bankers said, we don't want to provide commodity. We want to own the market. The final frontier is your mobile phone.
We need to change the culture of doing business with the new technologies.
Without alternative channels, we are not ready to serve each one client in each minute. In other way, the market is more promising.
But you don't expect the smaller and mid-sized banks to get together, sit in one room, drink a coffee several times and decide to do something different?
It could be.
No, competitors come together when they see a threat, rather than an opportunity.
Banks and telcos are very intrinsic in terms of just dealing with their own customers. If you want to send money to your friend, you need to know that the service works with everyone. And then it's actually very viable because you will get the whole cake. You don't share it with anyone.
The biggest problem for SEP was exactly that we didn't manage to make this level of penetration of the critical mass.
Are you going to continue to push the old methods onto the new open infrastructure, or are you going to do the leapfrog and jump to the new ones? If you have eyeballs, you own the customer. It makes a lot of sense for them to try out financial services. You're logging in on Facebook, you see the weather report for today, you see a friend getting married, and you see the balance of your bank account. So that's the first step.
Most of the people, they prefer to have and to take the service from those who is strongly focused in one and the same area, or to be a leader in one and the same area.
It's Google, right? They launched tests, direct to consumers, direct to merchants. So there's no reason why Google wouldn't take that infrastructure, that solution, and say, oh, here's another market. No wonder why it was so popular in Norway, because you have everything. The funny thing is, if you think about that, if you already have everything, you can pay with your card everywhere, everything is digital. What is the real benefit, right? It's a marginal benefit to do mobile payments, but it solves some very important problems for even the richest persons in the world. So it drives a lot of adoption because it's marginally better.